Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 24th of October, Monday. We are starting a new week, a new big week. This week we have big earnings from tech stocks. Today, Philips. Tomorrow, I think it's Meta, Facebook, and Microsoft. And rest of the week, Amazon, Apple. So watch out for earnings starting tomorrow from the big techs of Nasdaq, because this will impact the market for sure. So this morning we had in overnight, as you can see, this red level that we have in 11,300, right at that spot. If we change to the 1 hour, we are seeing that last week we were pivoting with a lot of resistance from this level, and on Friday we squeezed a lot of people on this movement, and basically we were quite, let me check here, we were quite bullish on Friday, squeezing due to max pain on third week's expiration for options. I uploaded this weekend a YouTube short explaining the reason why we did what we did on Friday. So remember to take a look to that short. So basically, for that squeeze on Friday, we are more or less trading sideways. We look down 11,260 pre-market low, but we are still pivoting. You can see here we had a lot of action in this blue line. That blue line is last week high, 11,431. So we had one tap, two taps, and this big rejection 1 hour ago. So that's an important level that we have to take into consideration today. If we start from the daily, from top to bottom, right now we are putting a doji. That means equilibrium, uncertainty. We have no news for today. Well, we have news, economic data, but not for a lot of important things like labor market, unemployment, payrolls, CPI. So this morning we have the Europe zone, Europe area, S&P manufacturing, services and composite that came lower than expected. That's good for the overall economy of Europe. And we have the same kind of numbers at 9:45, 15 minutes after the open. We have the composite PMA, services PMA, and manufacturing PMA. We need these to go lower. That means that demand and PMI are going lower, and maybe the production and the global services for S&P are decreasing. That means economy is slowing down, and we want that. Something that also to take into account at 11:30, 6-month bill action bonds and 3-month bill action. So we have to, I think, something important to note are bonds and yields. Bond market is quite hot right now because yields are still pushing higher. And more or less, if we change to the yield sector, so we already reviewed the Nasdaq is trading sideways right now, almost flat. S&P is 0.33 futures. So let's take a look to the yields. TLT, Treasury bonds. After last week, we put a very nice, if we change to the weekly, this last week was impressive into the red. We are almost going lows to 2011. So almost 11 years ago, we are approaching 90. So I think this week kind of a pullback if yields also pull back. High yield corporate bonds put a nice daily candle on Friday, and we are still chopping around in this level. 73 needs to recover. So we would like to see again a retest of this area of 73. And the 10-year and the 2-year are still pulling back. So if you notice, I have some alerts in here. 10 years still over 5. above 4, 4.2% right now in the red, but 2-year is approaching again 4.5. That means the inverted yield curve is decreasing, is pulling back after Friday's big move on the Fed, kind of pivoting the news about that I'm not buying. I don't think Fed is pivoting right now. This year they are still going to increase interest rates by 0.75%. Economists, analysts are pricing that in. If we take a look to the FedWatch tool, we can still see that 94% of analysts are pricing in 75%, 75 basis points. So I'm not buying that kind of news in which Fed is pivoting to decrease or lower the interest rates hike. So yields are showing that we are pulling back a bit. For this year, we are touching 4.2, and for next year, we pull back from 5. That's good news for the economy. But we are still super high, 4.85, 87, and also September. So from April next year to September next year, we pull back from 5% interest rates to 4.8%. That's good. That's why we kind of see some of the bullish sentiment that we had Friday. But I don't think we are seeing big data from the economic events backing up that kind of movement, that kind of pivot from the Fed. So we will have to wait. And this week we are focusing on earnings. So if we are seeing bad earnings, we are going down. And if we are seeing good earnings, I think we will go up. Dollar also will have key impact on these earnings. We need a weak dollar. So we pull back from 114 to below 112, but then we held this support, this green area, and we are almost holding that 112. So holding EMA, we are seeing weakness, but we are not seeing real weakness. That would mean dollar going down like this. That would mean dollar will support big earnings, and that would be good also for Japan, Central Bank of Japan, and also the Central Bank of Europe. And so we talked about yields, treasury bonds. What about energy? Energy, crude oil is still pulling back. We are in a key area in which we broke in this spot descending resistance, but we failed the move to 88, 89. These red areas resistance. We were chopping around on Friday, and today we are seeing weakness across the board, not only for crude oil, but also for net gas. Net gas is literally being destroyed. I updated the chart, and I can see, I think, this kind of pivot in 4.8, but I think we can see 5 establishing some kind of sideways price action, market structure supporting 5. But for sure, natural gas and crude oil are pulling back, both of them in the red, 2.2%. And I think that's good for overall inflation, at least the CPI one. The core CPI will depend on food and some other aspects of the economy that we need to cool down. For the financials, well, we are also chopping around utilities. I would like to see this kind of move from utilities. Utilities usually a risk-off sector. So if we see some kind of push, we can see overall defensive stance from Wall Street for investors. And we are also following up on XLY versus XLP, consumer discretionary versus staples. XLY is risk on and XLP is risk off. So if we are seeing XLY, consumer discretionary, going up, this ratio will go up. Right now is minus 1% also. So we are not seeing a lot of risk put in the market from investors. And we have to wait for that kind of confidence for people to invest more risky assets. And for the rest, let's go back to the Nasdaq. 30-minute chart, these three taps of last week high, 11,430, and we're still there. So regarding volume, we can see a lot of volume in this area from yesterday's regular trading hours. And if we check the overnight volumes, we can see a big range in here, 11,300 until 400. This area is trading a lot of volume. So we will see if this will act as support or as resistance. I can see some kind of movement to the downside, maybe chopping around right here. And if we break these pre-market lows, I think we can see 11,000 again, or I don't know if 11,000 or this low from last week. That would be disastrous. If we hold last week high, 11,400, I can see a move. If we change to the 2 hours, I can see a move full repair to 11,500 or reverse 600. That is starting to see again 700. This area of resistance from a lot of while back. We can see this pivot at 11,720. So if we hold this important pivot right now, we are rejecting the last week high. If we reclaim that and we see strength pushing pre-market highs at 11,500, we can see 600 and 700. So those are your spots if you want to take some longs or shorts. I think today, without any economic data, we can see maybe range day, sideways day, people waiting for earnings tomorrow. Big tech is reporting starting tomorrow earnings. So perhaps people is waiting for tomorrow to start moving some investments. I think that's all from now. Tesla reported news that is cutting the price of the Model 3 and Model Y in China. So that's the reason why we have this minus 2.77% in the red in pre-market gapping down. But for the rest, Amazon is quite strong. So holidays, Christmas, retail is quite strong right now. So we'll see. We'll have to take a lot of to be patient to see what kind of market we have today after Friday's squeeze. And I have my pivots. You have to also trade based on your pivots. Plan your trade and trade your plan is the most important thing. Discipline and risk management, remember. So as always, thank you for your time. If you have any questions, you can comment down below and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with a market update. Remember, discipline and risk management are key for success. Stay safe, everyone.